Wow. What a ride yesterday was in the markets. We saw some serious upward momentum.
Absolutely. The S&P 500 jumped, what, 1.7%?
Yeah, the Dow climbed 1.1%, but the Nasdaq really took off,
Yeah.
up by a pretty significant 2.5%.
Huge day for the Nasdaq.
So let's unpack this. What fueled such a broad surge?
Well, it looks like a fascinating mix, really. Potential shifts in trade winds, plus some really key earnings reports that landed on April 23rd.
Right.
We've been sifting through, a stack of market analyses to get to the heart of what drove this dynamic trading day.
Good. Because the goal here is to cut through the noise, the immediate headlines, and really figure out the core insights for you, the listener.
Exactly. Those first reactions don't always capture the whole picture.
And it feels like the big narrative yesterday was, well, all about tariffs, doesn't it? The market seems to be doing a bit of a dance based on potential changes.
That's spot on. The tariff tango, you could call it. We heard comments hinting at maybe a softer stance on Fed Chair Powell. But more crucially, indications of substantial tariff reductions on goods coming from China.
Substantial? Like how substantial are we talking?
Well, the figures being floated, and these are just illustrative, suggest maybe a drop from a hypothetical level around, say, 145% down to somewhere in the 50-65% range.
Wow, that is substantial.
It is. And the key insight here is just how much even the potential for a change like that can move the needle on market sentiment.
Okay, so here's where it gets really interesting, right? The market seems to have grabbed onto that idea, reduced tariffs, maybe easing trade tensions.
Mm-hmm.
And that looks like a major driver for the day's gains.
Yeah.
But hang on, China's still saying they want all tariffs gone, aren't they?
Precisely. That's the push and pull. The market reaction, betting on de-escalation.
Okay.
But it's critical to remember China's position, complete removal. That hasn't changed.
So the tango continues.
It does. And Piper Sandler's analysis kind of backs this up. They're thinking a short-term truce is likely.
A truce?
Yeah.
Okay, short term. But if Wolf Research is flagging potential longer-term volatility, doesn't even a short-term truce still feel a bit shaky? Maybe temper some of that initial excitement.
That's a really crucial point. Piper Sandler suggests a temporary ease-up, sure, but the underlying tensions, the chance of future friction, that's still very much there.
Right.
And if you connect this to the bigger picture, Wolf Research is stressing the, broader implications. Global growth, potential market swings, depending on how these talks actually play out.
So the market liked the idea of a truce, but the reality is still uncertain.
Very much so. It feels more like a pause than a definitive end to the dispute.
Okay, let's pivot then. Tech sector. Really stood out yesterday. Some impressive gains, but maybe with a few wrinkles.
Absolutely. Broad gains across tech. Tesla surged 5%. NVIDIA, Intel, both up around 5% too.
And the semiconductor ETF.
VanEck Semi ETF jumped 4%. The immediate thinking here seems to be those existing tariff exemptions on semiconductors.
So a direct, tangible benefit for them right now.
Ex-
And Tesla's situation was, well, particularly interesting.
Yeah.
Elon Musk suggesting more focus on the company. Investors seem to like that.
They did, which is fascinating, right? Because profit was down significantly, like 71%.
Wow, 71% down? But the stock goes up on focus.
It seems the market, at least yesterday, valued the idea of Musk dedicating more attention. It really makes you wonder what investors prioritize and when.
Leadership focus versus immediate numbers. Complex.
But we also have to factor in Morningstar's caution. They're warning that if new tech tariffs come down the line, then major players like Apple, Dell, they could face some serious headwinds. So this current tech rally might have some, asterisks attached.
Right. So immediate relief, maybe not permanent relief, depending on policy.
Oh,
Got it.
yeah.
But one tech name really shone. Service now, a massive 14% jump.
Incredible day for them. And what's fascinating is their really robust outlook for software. Their CEO basically said companies are still investing heavily in AI tools, digital transformation, even if there are broader economic worries.
So resilience in certain pockets of tech, especially AI-related stuff.
Seems that way. Suggests those trends have real staying power.
Okay, so a mixed picture within tech. Some relief, some underlying strength. Let's dig into some individual earnings then. Texas Instruments, strong showing.
Very strong. TI didn't just beat earnings expectations, they crushed them. And gave a positive revenue forecast, too, about $4.5 billion next quarter.
Nice.
And analysts are pointing out that analog chips, which are their thing, might be pretty resilient even if the broader economy slows.
Interesting. A potential stable spot in the semiconductor world.
Could be.
And Boeing. They actually had some positive news for once.
Yes, a bit of welcome news. Stock up 6%, mainly because their losses were reduced thanks to delivering more planes.
Okay, encouraging for them after all their recent struggles.
Definitely. But the airline industry overall wasn't exactly celebrating. Southwest Airlines saw a pretty big drop.
Oh, yeah. What happened there?
Stock fell 4%. And they made a big move, pulled their financial guidance for 2025, and they're cutting flights.
Pulled guidance. Wow.
Well, the CEO, Bob Jordan, specifically said travelers are waiting for clarity.
Waiting for clarity. That sounds uncertain, like the tariff situation.
Exactly. That feeling seems to be echoing across different sectors. What clarity are they waiting for? Economic outlook? Something else?
Makes you wonder. Then we had Enphase Energy down in the solar sector. Big drop there, too.
Huge. Down almost 16%. A 15.7% decline. Really sharp.
Ouch. What drove that?
They missed on both sales and profit targets. Plus, they specifically warned about tariffs on batteries coming from China squeezing their profit margins.
Ah, so a direct hit from tariffs underscores the real-world impact.
Absolutely. Very clear example there.
And even Chipotle, usually seen as pretty resilient, right? But they sounded cautious, too.
Exactly. Stock dipped 2% after they lowered their sales forecasts. The CEO pointed to slow consumer spending.
So maybe broader economic pressure is starting to bite even there.
That's the question it raises. Is the consumer starting to pull back more broadly?
So yeah, a real mix depending on the industry, the company. Now, how did all this market action ripple into other assets? Gold, for instance.
It's been on quite a tear.
Well, what's interesting is the sharp pullback there.
Yeah.
After hitting that record high, $3,500 an ounce, it fell back to $3,300.
Wow. Quite a drop. Why?
The main reason seems to be a shift in sentiment. Money flowing out of those traditional safe havens, like gold.
And into stocks, presumably, fueled by the tariff optimism.
That seems to be the narrative. Risk-on move. But BTI suggests this could just be a multi-month dip, maybe even a buying opportunity down the road.
Interesting. So for you following gold, maybe something to watch closely.
Could be.
Okay, what about oil prices? They moved too.
Yeah, WTI crude dipped down to $62.30 a barrel. The concern here is, well, if tariffs do come back or stay high, that could slow down global growth.
And less growth means less demand for oil.
Exactly. Plus, you've got the upcoming OPEC Plus meeting, always a factor. Could they announce more production cuts that could prop prices up again? Right, always something with oil. And crypto. Bitcoin's still on its wild ride.
Oh, yeah. Bitcoin's getting close to $94,000. That's a huge gain for the month, like 25%.
Wow.
And there's a lot of optimism floating around. Some traders are even talking about $100 if the tariff situation really eases up.
So maybe some tariff relief hope spilling over into crypto, too.
Definitely feels like a FOMO alert vibe in that space right now. Fear of missing out.
It really feels like these tariff whispers are sending ripples everywhere, across all asset classes, even internationally.
Absolutely. Look at Mexico. Their ETF hit an 8-month high.
Really? What?
Optimism about talks to lift auto tariffs. President Sheinbaum basically said, no deal yet, but stay tuned. So progress, but still negotiating. Meanwhile, China. Still holding firm, reiterating they want all U.S. tariffs gone. Just underscores how complex these global trade talks are.
Right. So we have all these market reactions, potential policy shifts, but what are the analysts saying underneath it all? Different takes on what this means for the broader economy.
Oh, definitely divergent views. You've got BCA research sounding more cautious. They're highlighting rising recession risks.
Based on what?
Things like falling capital expenditure, companies spending less on long-term assets and weaker hiring plans, paints a more worrying picture of fundamentals.
Okay, so a bearish view.
But then, conversely, you have UBS remaining more optimistic. They're pointing to strong demand, especially in areas like AI.
Like we saw with ServiceNow.
Exactly.
Yeah.
And they think the impact of tariffs on tech might actually be limited.
So quite a split then. Bullish versus bearish.
It really highlights the uncertainty right now and underscores why, for you listening, it's important to consider multiple scenarios. Wolf Research's advice. Prepare for more volatility.
More swings ahead.
Yeah, and maybe consider more defensive sectors, utilities, healthcare, that kind of thing, as a potential buffer.
Okay, so a real split among the experts definitely emphasizes the complexity we're navigating.
And it raises an important question for you, doesn't it? How do you weigh that potential upside of trade relief against these underlying worries about the economy's health?
Good question. Well, let's try to bring this deep dive into yesterday's action to a close. It really seems the market's strong, positive reaction was, well, largely fueled by those signals about potential tariff relief.
Yeah, especially helping the tech sector initially.
But the actual implementation of any changes, and critically, China's response, those remain huge unknowns.
Absolutely huge. And the earnings reports we saw, such a mixed bag, really reflecting specific industry dynamics, but also those broader questions about consumer spending and economic growth.
The big theme here, it feels like, is just how interconnected everything is. Global trade policy, individual company performance, investor sentiment.
Totally. What started as maybe some hints about tariffs had this cascade effect across stocks, gold, oil, crypto, even international markets.
Yeah. These potential tariff changes clearly have implications far beyond just the stock market ticker.
Definitely influences commodity prices, international relations, the whole 9 yards.
So here's a final thought maybe for you to chew on. Given these conflicting analyst views we just talked about, and how delicate these trade negotiations clearly are, what do you see as the most significant potential risks and opportunities looking ahead?
How might these developments shape your own understanding or maybe even decisions in the coming weeks and months?
Definitely something to keep thinking about.